All right, guys, how's it going? We're going to carry on here with our indicator spotlight. So as we roll into the first week of June, we're going to feature the market structure indicator for June. So it'll be a series of videos here that will get progressively more complex as we get into some of the nuance of market structure. Now, market structure, again, I'm not going to do a full training here. In fact, I'm going to put some links to videos underneath that I've done previously that really go into the full concept and much of the detail and the theory of it. But for our review here, we're just going to keep it very simple because I'm going to try and keep this video relatively short. Now, market structure is one of those, it's, you know, what's old is new. I mean, market structure is as old as time, as old as we've been charting. And it's just based right back to the basic definition of a trend, right? How do we define a trend? Higher, high, higher, low, higher, high, right? So we all know this. Well, where market structure gets more interesting is the little nuances that help us identify trend change, that help us identify when the timing might be right to enter the market. So let's just do some basic review here, and then we'll take it to the charts. And I'm just going to use, here we are after the close on Monday. I'm just going to use Monday's data, and we'll look at some higher time frames that will take us back through the last week, month, etc. So in theory, right, the idea is once we get a break of structure, the idea is not to chase the breakout. The idea is that the break of structures it sets us up for the retracement. We can anticipate that after a break of structure, there's likely to be a retrace. And then as we see it again. Now, those of you that have studied any of our content over the 5 years that we've been doing this, you know that I define myself as a retracement trader, and I would tell you that's the smarter way to approach trading in general is to be a retracement trader and not a breakout trader. The possible exception is in the equity markets where breakout traders can do quite well. But in futures and FX and crypto, I think you're going to be better served to be focusing on the opportunities created after a break of structure that leads to the retracement. So as we look at an example here, one of the things you have to deal with early on, and there is no right answer here. It's a matter of looking at the price action and then doing a little bit of interpretation based on how strong and how far the market moves after a break of structure. So when we look at it here, this is idealized, right? So, oh, perfect retrace, perfect retrace. The market's not always going to give you a perfect line drawing. It will at times be similar to this, but we'll have to deal with a couple of things. One is you have to decide for yourself, again, there's no right answer, how many breaks of structure are required for you to define the trend. So here we get one, it confirms at the second. Now that's how I view it, but you have to be flexible because it's very possible that as we look at it here, that you could have a deep retracement that comes down here and we sweep the liquidity here and then the trend carries on and we just go back here and we get another break of structure and we can look back on it in hindsight, right? It's always easy in hindsight to see, oh, well, what happened here? Well, this was likely just a liquidity grab here because we all know that under every pivot is our stops, right? This is what, remember, the purpose of the market is to facilitate trade. Where can it find liquidity, right? It's going to be around every one of these swings. Not that that's the wrong place to put the stop. That's where stops lie, right? Whether you new traders, retail traders, it doesn't matter. There's going to be liquidity under these swings. That's not likely to change. So when you see a deeper retracement like this, you got to use a bit of judgment based on what follows to determine whether or not this is a trend change. Now, I personally, right, just having done this for a long time, I like to confirm the trend change with a second break of structure, right? So in this case, if I get a swing here, I get a lower low and then a retrace here, I want another lower low, right? That would allow for, here if I do it this way, would allow for a lower high, right? So now I know, oh, okay, I can confirm the trend change here. I get a lower low, then I get a lower high that leads to another break of structure. So the second break of structure, if I just do it here in yellow, the second break of structure confirms the trend change. Just like here, the second break of structure confirms the trend. You got to use a little bit of judgment here, because based on the volatility levels in the market and what you're using to determine swing structure, this is not uncommon. As we're going to look at, I, I, I think we can see it all just in Monday. I'm going to use the YM here, where this happens, where we get these swings where liquidity grabs are happening, and you've got to decide, oh, okay, well, is that a trend change? Well, of course, you don't know until you see the following price action, but this is something you're going to run into. So the line drawing theory, yeah, I mean, again, there are times when it's so easy, it almost seems unfair. But then a day like today, where you might potentially have these things happening like this, where you're like, okay, well, wait, where is the trend? And then the point of all of this is to defer to the higher time frame, which might guide you into what you might anticipate. Okay, so there's the theory. Let's oh, where do I want to go here? Let's go over here to this. Now here, all I've done, this is today, Monday the 5th, and all I've done is just make the candles transparent. So you can see here now, let's get this off of this. You can see here now, wow, it kind of looks like what we're just looking at here. So let's go back to Friday, because this is such a good example here of theory and reality. Okay, so even coming into the day, now this, we all know what was happening here and why we had this kind of day. So here, break of structure, retrace, break of structure, retrace, break of structure, retrace, break of structure. Every single break of structure leads to a retrace until we get right here. Right now, something changes right here, because the trend doesn't continue. I don't get a higher high here. This is the failure where, oh, something has potentially changed here, because this process of higher highs, higher lows, higher high, right, has failed here. Now, in fact, what does it lead to? A break of structure. Right, so we take out this low here. Now, with that break of structure, can I determine that I've had a trend change? Well, some will approach it that way, say, oh, well, trend is down now. I would propose to you that it doesn't confirm until here, because what happens next is equally as important. I get a retrace, which is after a break of structure, whether it's up or down, is exactly what you're anticipating, is the retrace. Well, of course, one possibility is we just carried on and this was liquidity grab. Now here we're in the overnight here, but it'll say theory holds. Right now, this could keep going. Oh, okay, I get what happened here. Just liquidity grab. We're going on, and the trend continues. But that's not what I get. I get a retrace that leads to another break of structure. Then I get another retrace that leads to another break of structure. Now here's where it starts to get a little trickier, and this is just the reality of trading. I get a break of structure here confirming that I'm in a downtrend. But then, boom, right here, this is 9:50. This is right 10 o'clock, right? There's often volatility at 10 o'clock. We get a push up here, and I break structure in the other direction. Well, now you're thinking, oh shit, sorry, here, let's try to get it. Is that a new trend, right? Is this a trend reversal? Well, okay. You've got the break of structure. What are you anticipating here? Well, here comes the retrace. Here comes the retrace. Now, you can retrace right up to that pivot. In fact, for our breaks of structure, we want a candle close. So you could actually wick through it and still carry on here and be in an uptrend, right, per that break of structure, because I would have a second break of structure that included, well, this would be a little tricky here, because you'd have a lower low here via the wick, but you wouldn't have a close. So you'd be, that would be a tough one. But what in fact happens is that even though we get a break of structure up here, you can kind of, again, always easy in hindsight, see likely what had just happened here is this was a liquidity grab. Stops here, up they go, grab them all, down they go. All right, which looks a lot like what we were just drawing up over here, right? Up, oh, is that liquidity, trend change? What is it? Well, we come back here. This is just a perfect example of just the reality of trying to approach the market with this. Now, you say, looking at that, you say, oh, okay, well, gosh, how am I going to know? Well, before we go any further into the day, let's be mindful of the fact that here I'm looking at a 900 tick, which is probably it's a proxy for probably a 2 or a 3 minute here. I will use a couple, right? It just happens to be a good example here. So as you're looking at this, remember the market's fractal, so what's happening on this lower time frame needs to be reflected and be reflected in a higher time frame. So if we go now and we go over to a 15-minute and we start to think about, oh, okay, well, here's Friday, right? It looks a little different here, right? It's just up, 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 up. And then where's the last break of structure? We can see it here. I've got this arrow left over right here. So the last break of structure from this low broke structure here going into the day. Here's, well, see, you see the trend here. So here's break of structure, retrace, break of structure. Whoa, that's a big rip. But here's the low. Right now our software does this for you. It's going to identify the strong low and the weak high. So you see weak high, strong low. So we are operating within this range right here. Right? Here's the low, here's the high. Well, after this break of structure, that's quite a break, but what are we anticipating after the break of structure? A retrace. Now, where would we like to be buyers if it's offered to us is in the discount, which would be 50% or below, right? That would be a discount relative to premium being 50% or higher. So after this break of structure, what you'd be hoping for is that a retrace comes back to the 50, or in our case, right, we'd always be looking for something at the golden zone as well if it's offered. Now, we don't know. This would come down here to the 50 and off we go because the trend has not been broken yet. Here's the swing. Here's the retrace. The anticipation is we'd continue higher. Well, if we go up and we fail and then we get another break, right now we're down in the golden zone. Okay, you still interested here? Well, it'll be a function of how it looks. We'll cross that bridge maybe in the follow-up video. If we come down this low, we'll take a look at what happens there. But the point I'm trying to make is with this, as we start to come down, it's exactly what you're anticipating on the day. More than that, it's what you're hoping for. Oh, here's the range. God, I hope I get a retrace. Hope it'll retrace for me today. If not today, well, if we take this off, well, then again, I'm going to wait because this requires patience to wait for those prime entries. Both of these would be areas of interest going into tomorrow. Well, we'll see what happens in the overnight. Now, remember, because we're fractal, we're going to go from the 15-minute. Well, let's go to the 4 hour. Look at that. Makes the case here. Well, here's all the debt deal. We're not going to have a deal. We're going to default, and then we got a deal. Well, okay. So here's what happens, right? Here's the lowest low. Let me draw this real quickly, right? So here's the high that leads to a break of structure. All right. So here's the high. Here's the break of structure. Retrace. We come down. We do not break structure. We retrace again. Now we get a break of structure. So when we come all the way back here, here's another break of structure. Trend change. It's too soon to tell. Here's what I know. I have a break of structure. After the break of structure, what is it I'm waiting for? Right? I'm waiting for the retrace. So anticipating per that break of structure that the market would be coming down today, okay, I know it's easier in hindsight, but it's what you were looking for. It's always a good idea to have some expectation based on the swing structure of, well, what am I looking for today? Well, last thing that happened is a break of structure. I'm looking for the retrace. Now, this could take a week to get here, or it may never get here. There's nothing says that the market has to come down and go below the 50% to accommodate so that we can buy it at a discount. That could be the low right here, and we carry on. We don't know. This is just what we'd hope to see. Could we get it down here at a discount? Maybe right in that pocket there. Oh, and conveniently, on the 4 hour, there's a little demand zone right here as well. Oh, we could refine that here, but that'll work. I would use the whole thing. Right? This is the last push down before we go up, right? So likely there's demand here, right? So there would, look how fast we go, right? Now again, it's a 4 hour, but if we come back down here, this would be an area of interest to stay consistent with that theme. Break of structure, retrace. Okay, so let's go back here. Let me get this one off. So understanding that now, that everything is working in the same direction. Now when you come over to something like your entry time frame, you're on the 1 minute, 2 minute, 5 minute. So now here's how it looks with the candles applied. So here's that push up where they swept all the liquidity here at the open. Again, 10 o'clock. I always mark 10 o'clock because there's often volatility there. So swing, we go into an order block here. The blue bars, those are just inside bars. So here's that little break of structure. Oh, well, if it was going to come down here and go back up, right, what do we get? Second break of structure. Here, I think the trade of the day is right here, which would have been a tricky one to nail because we've just had a break of structure. Well, remember, it's it's easy in hindsight. Here's the break of structure. You're anticipating a retrace. What you may not have been anticipating is that we'd go all the way down to that same low and then we'd get the retrace here. But right there, just looking at that, anyone who follows my work knows that this would be an area of interest as we come, let me get that right on the pivot, as we come right into the golden zone here. Right? I mean, that's just as textbook as I can get it. I mean, I can't make that up, right? So here that's the high of that's the RTH high of the day. So come all of this swing structure, break of structure, break of structure, break of structure, break of structure. Here's the retrace. Now, likely, if we look here, what's the way to do this here? Likely, all of this here, all of this is liquidity, right? So this is, we know likely there's stops here. So as we come back up, grabbing that liquidity, down we go. Well, if you miss this one, the reason why you might have been looking for the short here is because of the break of structure, right? The bullish break, right? So you would have been looking for this, right? A bullish break, you're looking for, maybe the IB low will hold. We come back and then we carry on with that trend, but not only does it breaks hard, right? I mean, they just crush this. So now we come down. Amazingly, we don't break structure here. This is to the tick low. So this could have gone and not changed the trend. It still would have been an uptrend. But what happens, right? We come right back here, some liquidity, grab it. There's the McGinley. And now, if you didn't get that one because you were unsure, you got a second bite at it right here. Now you've got an order block here. You're at the IB low. You're anticipating the down move. Didn't get that one. You got another one. Right now, this one, right, we're running out of time into the end of the day, does not give us a new low, and in fact, the retrace, right, as we get here, now we've got internal swings. This doesn't give us a new low, this doesn't give us a new high, so we chop into the close at the end of the day. Eventually, now we break it, going into the following day. So I'll probably wrap it there, and we'll continue to build on this as we get into a little bit more about, okay, well, what else could I have looked for here? What else could I have looked for here? How does that relate back to the 4-hour and the 15-minute? But really what I want you to get from this is this. Right, I want you to look at it here because we all see the line drawings. Well, here is the reality of the line drawings. That's why we start with line drawings. So you get conceptually clear on what's happening, and then bring it over here. Whoops, bring it over here. Take the candles out. Well, is that really what's happening? Okay, great. Now add the candles. Yeah, that's what's happening. Now add the candles. Always gets a little trickier, right? But that same swing structure, that same phenomenon, that's what's happening here. So this can be a useful way to review at the end of the day, so you build some conviction, some confidence in how to approach the market with this kind of a technical mindset and based on the price action. Right? Breaks of structure, very telling, right, in terms of your bias, in terms of what you're looking for. So things to really focus on. Okay, that'll be it for today, and I'll carry on. We'll add some complexity and some nuance to this as the month progresses. Okay, guys, you can always download all of our indicators for a 7-day free trial. Just go over to TradeDevils-Indicators.com. Just create a free account. Access to our Discord is completely free, so you can get in there and engage, ask questions. Lots of ways that we're here to try and help you have the best experience you can with our tools, and this is a good one. All right, guys, have a good one, and we'll talk to you on the next one.